Good morning. I'm economist and investment newsletter writer Michael Woody O'Brien. Today is October the 24th, 2013. And the primary reason I want to make this video is so later I can refer back to it as a pivot point in bullion-related markets. When you watch markets and charts as much as I do, over time, over decades, you notice certain patterns which indicate a market is at a pivot point where it's highly likely to go much higher or in some cases much lower. One of the worst things to have your money in the past 2 years has been the bullion miners. Specifically, the best way to invest in these with some degree of efficiency and diversification is to own GDX, GDXJ, and SIL. These are exchange traded funds, ETFs, that basically invest. GDX is more senior gold miners, GDXJ is more junior gold miners, SIL is silver miners. For most investors who don't have millions of dollars to diversify, these are a good way to diversify at a low cost. But they've been terrible investments for the better part of 2 years. There's also a leveraged ETF in this area, NUGT, which is a 3 times leveraged of more senior miners, which has just been death. It's off over 90%. Far worse than the physical bullion or the physical bullion ETFs or even the future bullion ETFs. These gold mining stocks have been a disaster to own for the past 2 years. And if you're like me, if you own any of them, it has certainly been the house of pain. However, in the longer term, these bullion miners are in effect the central banks of the future. Because if you believe, as I do, this monetary paradigm of dollar hegemony is going to collapse under its own weight, just like a 150-foot, 100-year-old tree on my farm. It's going to fall of its own weight unless somebody cuts it down. Again, that makes the future value of these miners very, very valuable. But in terms of charts, we're at a very interesting moment for these, and I would call to your attention the charts, again, of GDX, GDXJ, and SIL. We are at the end of a W bottom formation in the charts for these three, which represent the gold mining and silver mining sectors at large. And I would say with an 85% probability, we have an ascending W pattern here that's usually very, very bullish. And I think if you look back on this date, October 23rd, 2013, this is going to be a moment of very, very little downside risk and enormous upside potential. With all the global crises going on and all the efforts to suppress the price of gold and other bullion and commodities, it really does say to me, looking at these charts, with my over 3 decades worth of experience in technical analysis in markets, we are potentially at the lowest risk, highest potential markets for these miners that we have been in a long time. In terms of other markets in the stock and commodity area, I'm starting to see these same ascending W patterns in grains and some agricultural products. Coffee continues to be a disaster. The JO ETF is one people should take a look at, but if you think coffee is going to go to being free, that's a reason not to buy it. But coffee, again, another very, very valuable commodity in the long term, but still can't seem to find a bottom here. The S&P 500 and most U.S. stocks, who really knows? Because without quantitative easing, they'd be a terrible crash. The stock market would be half of what it is now. My own feeling is the Federal Reserve isn't going to stop quantitative easing ever. It can't, because that would blow up the Ponzi scheme. But we are starting to see the point where Fortune 500 companies and public companies are starting to have lower total revenue, and they're running out of accounting tricks to pretend that they have growing revenue. Eventually, there's going to be an avalanche in the stock market that could be next week. It could be a year from next week. Nobody really knows. In the energy area, I think people really should focus on energy that is not transportation fuel, but rather heating fuel, meaning coal, to a lesser degree, natural gas, and the heating oil ETFs. In that area, they're really terrific ETFs. KOL for coal, UNG for natural gas, and the heating oil is UHN, I believe. So I would tell you, I'd be a little bit cautious about oil itself and transportation fuels. Even the wood, WOOD, ETF has done tremendously well, but that's a little high. I wouldn't buy that at this point. But I do think people should consider we are probably past the bottom in most commodity prices. I think if you look at the Rogers commodity index and some of the other broader commodity indexes, you're going to see we're at a point here where the stock market is irrationally high. Given how weak the economy is, commodity prices are irrationally low, and that trend is going to reverse. These are two ships that are going to pass in the night at some point in time, and I think we're going to look back to this week and this date as really an inflection point before stocks potentially go much lower. Maybe they go sideways, maybe they go a little higher for another year, but I definitely think we're going to see much higher commodity prices 6 months and a year from now, especially in bullion, especially in these bullion miners. Thanks for your time. You can always get a hold of me on Facebook. I'm the only Woody O'Brien on Facebook. My websites are woodyknowsmarkets.com for the investment newsletter, and abolishfiatslavery.com for my life's work, the abolition of the Federal Reserve and fiat money. Thanks for watching this video. Please share it with your friends, and always good to be with you. Feel free to email me or send me a question through Facebook. The email address is mwoodyO@hushmail.com. The direct dial cell phone number is 717-691-0605. Love to hear from fans of my work.